Inflation dropped more than expected. What a happy surprise. Right now, though, the market is kind of cautiously optimistic. Let's take a little bit of a closer look. Today's inflation report brought very good news. The most important number, core inflation, that went down from 3 to 2.6%, and that is more than they expected. In fact, that's the lowest level we've seen in this cycle so far. And it's the first real sign that inflation may actually be breaking out of its too high zone. Normally, things like this would mark a really big drop in interest rates and particularly mortgage rates. Now, rates are improving, but a little bit more cautiously than we might have expected to see. Why the cautious reaction? Some investors may be unsure how clean the data is after the recent government shutdown. Others may simply be hesitant to push rates aggressively lower as we approach year end. And some may be waiting to see if this improvement continues in future reports. Still, it's important to emphasize this. The inflation data itself was better than anyone predicted. From a fundamentals standpoint, this is exactly the kind of progress the Fed needs to see before becoming more comfortable with cutting rates further. One note, there's no month to month inflation reading this time because October CPI wasn't produced during the shutdown. What this means for home buyers and realtors. Lower inflation is one of the most important ingredients for lower mortgage rates. Today's report supports the idea that rates should gradually trend down even if they don't fall quickly or all at once. And our bottom line today, this is genuinely good news for rates, but the market is choosing to move carefully. If inflation continues to cool in upcoming reports, today could end up being remembered as an important turning point rather than a one-day reaction. I hope this information helps. If it does, give me a like and a follow, and I hope you have a great day.